this video we are going to be analysing QQQ, which is the Nasdaq ETF. So to get straight into it, firstly we're going to go through the shorter term level. So if you're looking to trade this, probably by about Wednesday next week, then pay attention to these levels. If you're looking at a longer term horizon, then you can check the timestamp and go to the longer term analysis part of the analysis. So firstly, we want to note, as of right now, QQQ is pushing up a tiny bit, more of a pullback, but we would expect to push to around $91.25, even if we are going to continue lower. So we're making that move now. Then if we do continue lower, we would have support at one we've already broken at $289. But if we break that, then we do expect quite a sharp sell-off to around $282, taking us lower to $281. And then really far off will be 275, 271, and final levels at 268, 261, and 250. Now, even on a short-term horizon, these levels are quite far off. I mean, yes, the 282 and the 281 is quite realistic, but really the 275 at below is probably not all that realistic by Wednesday next week. So those will be the key supports. We'll just be paying attention to the 289. Will we break below? If so, then the 282 and the 281 supports. Now, on the other hand, if you're looking at a price increase, what are going to be key resistance levels? And as of right now, our closest resistance, once we break that 291, would be the 295.50. If we break that, then we are looking at 301/302. And then quite far from there, we're looking at 309 to 311. And taking us past there would be 315, 320, and final levels at 322 and 330. Now, obviously, again, a lot of these are very far off, and the reason for this is obviously the Nasdaq has been so volatile in the recent few days, and so it's made the deviations quite wide. So really that key focus would be just 295 and then $300, obviously a key psychological level. Will be quite hard to break that considering we are looking quite weak. But if we do and we're able to break all the way above the 302, this could show that the Nasdaq is turning a bit more bullish, and we would expect to push to around 309 from that level. Now, on the other hand, if you're looking at the longer term time frame and you want to see what are we expecting on a longer term move, then on the left we have a 6-month chart, on the right we have a 1-year chart. And now what we can see is at around 285 and 287 is our statistical mean on both the 1-year and the 6-month chart. And that's why if we go into, we can go to like a 5-day, 5-minute, within this level, this wide buying pressure keeps kicking in, because overall we expect a reversal to this level once we bounce off that first. So that's why we expected to move all the way to here. But now seeing this, we are starting to get some buying pressure, because this is deemed some sort of a good buying area. So if people are looking to get long buys in Nasdaq, this is where they are doing it. So if we are able to hold this level, what are going to be further off resistances? And we will be paying attention to 315, 325, and then quite far from there would be 345, 360, 376, $400, and 438. Obviously, again, a lot of these are very far off, but really the key focus would be all the resistances up to around $400 in kind of the next 3 to 6 months. Now, if we end up failing on this support level and continue down lower, then we are looking at $255/250. And if we can break that, then we're looking at 223, 212, and then final levels taking us to around 195, 175. And really they're going to be the key supports to the downside. So really this the 284, 285 level is going to be really key, because if we break below this, come back to retest it as resistance and selling pressure kicks in, then we expect quite a sharp sell-off all the way from that level to the 255, really at a minimum, which will require another 10% sell-off on the Nasdaq. So just as a heads up, if we do start making this move, it will be something I will be looking to play with SQQ, which is a triple leverage inverse ETF of the Nasdaq. S&P 500 ETF, SPY. So to get straight into it, what are going to be key resistance levels in the short term? So right now we're going to go through, if you're looking to day trade or do a short-term swing to about Wednesday next week, then these are the levels we're paying attention to. If you're looking at a longer term horizon than that, then check the timestamps and you can go to the longer term part of this analysis. So we can see our closest resistance is kind of where we hit now at $387. So right now we could start continuing down because we broke into our bear market support. We bounced off here to this resistance. And now if we're going to continue down in the short term, we could use this as that resistance to start kicking us down. But if we do break that, then we have that next resistance at around $390. And really, these are both key levels because we could hit one of these. Even if we're going to continue lower, we would expect a bounce at a minimum of this 387, but at a push, it could be the 390. But if you are more bearish on the stock, this is where we would expect it to hit to before continuing down. Now, though, if we break this and do continue up, then we're looking at 395, which we can see in the past has been quite strong resistance and support, and is also our statistical mean on the 10-day chart, so will be a heavy layer of resistance. Now, if we break that, then we do have our next resistance at $400, obviously a key psychological level, so that will make it quite strong alone, but also our first deviation on the 20-day chart. If we're able to break that, though, then we're looking at 402.50, 410, and 417 and kind of 421 as the closest kind of key resistance in the shorter term outlook of the stock. Now, on the other hand, if you want to pay more attention to the support levels, obviously this 384 is always going to be some sort of a key level because this, when the SPY is below this, the S&P 500 is in a bear market. So this is why if you go back and you will see this becomes a key layer of support time and time again. We came near enough to it before, we come back and we have tested it once again. If we break below it, again, that is dangerous because then we turn into a bear market. But if we break below that and continue down, then we're paying attention to the 380, 373, 369, 365, 359 and a final level at 350 as short-term support levels in the near future. Now, onto the longer term side of things. For this, we will be using a 6-month chart and a 1-year chart on the right. So now what are going to be key support levels if we continue down? So obviously at that 384, I did accidentally just wipe it there. This level is key to note because this is when it turns into a bear market. So we can note this in red and just make it very bold so you can see. But breaking below this level would be very dangerous because then we would expect sharp sell-offs because, yeah, the market turns bearish and just turns into what is deemed a bear market below that value. So if we break that, then we would really expect to push to 363. And again, what you're seeing play out right now is last time we came into the bear market, we got our bounce, and then we finally broke below. It came back to test it as resistance and then sold it off. And when we sell off, you always expect a move to that closest deviation. And that's why really we would expect the exact same thing to play out. If we break below the 384, we want to retest it as a resistance. And if so, then we're going to push down, more than likely down to $363. If we break that though, then we're looking at $358. Taking us below there would be 335, 331. And then final levels at 305 and 278 as final support levels to the downside. Now, on the other hand, if you are more bullish on the SPY, what are going to be key resistance levels? So if we're able to hold the 384 bear market level, then we're paying attention to 410 or 412, which is going to be our first deviation on the 6-month. Taking us past there would take us to 421, then 438, going on to 450, 465, 480 and final levels at 492 and $508. Now really these upper resistances probably aren't all that likely considering the Fed keeps tightening and when that happens the markets are going to fall. But really if you're looking at close term and kind of short term resistances that you may be able to even short, we'll be paying attention to the 412, the 422 and kind of at final levels 438 and 450. Really in the near term, don't really expect it to be going past there anytime soon. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out this analysis video here.